Hi, and welcome to the Stock Scores Market Minutes for January 7th, 2019. Happy New Year, everyone. Let's talk about the importance of creating good habits. A lot of our trading mistakes come from having bad habits. You see, the market is always evolving, and so we must also evolve. We can't do things simply because we've always done them. If we are following rules or processes simply because that's the way we've always done it, there may be room for improvement. And so something to try is wake up one day, pretend you have amnesia, consider what your goals are, and then think about what are the best ways, the best rules, the best processes to get to achieving your goals. Create good habits, try to break some of those bad habits in 2019. All right, let's get into this week's analysis, starting with the U.S. markets on the short-term time frame. So short-term time frame, this is 30-day, 60-minute. A few things have happened. We've broken the downward trend line. You can see we were oversold. We came back, and then this week we've broken that downward trend line, and we're now building a rising bottom consolidation that has resistance around 253, 254 on the SPY. What we now need is a breakout through that to get a short-term bullish signal. So for now, this is neutral, but it could turn bullish with a move to the upside. If we break down, then we'll go back into bearish mode. Moving along to the longer term chart, you can see that last week we made that what I call a dead cat bounce candle. We were oversold, we hit a new low, we closed above the open. That's a pretty good sign that we are bouncing back short term. So now, given that that shorter term chart, the 60-minute chart, looks like it probably will break higher, the question is now, how high will it go before it encounters resistance? And to answer that question, we draw the downward trend line, which has resistance right now at about 272 or so. But keep in mind that as time passes, we're going to move that lower. So my expectation is likely we move higher over the next couple of weeks until we hit that downward trend line, at which point the market will get stuck and we'll have to figure out what comes next. All right, so moving along to the Russell 2000 chart. This is the daily chart. I wanted to have a daily time frame because it's more or less what the S&P and the Dow look like short term. So again, you can see we're still very oversold because we are far below that downward trend line. I didn't actually draw it exactly the way it should be, more like that. And so the upside potential is that space there from, in this case on the IWM, roughly 137 up to perhaps 145. So that's a pretty significant amount of upside before the market hits resistance. So short term, I think the market can go higher, but longer term, I'm not sure. I don't want to get optimistic at all until we can start breaking in these longer term downward trend lines. So this is a tradable bounce. We had a few good days to the upside last week. I think that continues in the next week or two until we hit that downward trend line of resistance. Moving along to the Canadian market, almost the identical situation. There was the downward trend line broken, now building this rising bottom consolidation. And what we need is the breakout to the upside. If we fail, and if we instead break the cycle of rising bottoms and start to build falling tops again, that's when you want to get pessimistic in the short term. All right, so moving along to the longer term time frame, I can draw that trend line like so. And you can see there's some distance until we get up to it. Not as far as we saw in the U.S. exchanges, and so the upside perhaps a little bit more, a little less than on the U.S. exchanges. They didn't sell off as hard on the Canadian market, so therefore the upside potential until we hit resistance isn't as significant. Looking at the TSX Venture, remember last week I talked about the market looking like it wanted to bounce because we had made that little break of the downward trend line. And so we did get a pretty good bounce this week, and we're now coming up to that longer term resistance. We've just gone through it, and then the next phase downward trend line is up here. So how much higher will we go? My sense is we're probably going to pull back short term and then try to make another stab at rallying higher. And what you want to watch for is, do we make that pullback but make a rising bottom? That would be an optimistic sign. Onto the currency market, US dollar, as I said last week, showing a little bit of weakness, having broken the upward trend line, and we've had a little bit of follow through to the downside this week and still not really showing signs that the weakness is done. I think we could still go lower on the US dollar. And that's given a little bit of stability to the Canadian dollar this past week. This is a daily chart because I wanted to show the pretty substantial jump that we saw at the end of the week last week. However, that does not take this market out of the woods because you can see the downward trend line there. Probably get stuck, pull back, maybe make a rising bottom, and that'll put a bottom in, and then we'll make another stab at breaking that downward trend line. On to interest rates, had a good rally in the bond market the last couple of months, and that means interest rates have fallen. However, we're now at resistance, and you can see that the market went through that resistance during the week, but it could not hold that breakout, and that implies that we pull back a little bit here and go sideways for a while, building this cup and handle formation, which could ultimately culminate in a breakout through that resistance, and then perhaps we make a run towards 128 on the TLT. Commodities, gold continues to be a source of strength. As the US dollar is weakening, that will help gold even more and keep this upward trend. Of course, this is the weekly chart. No significant resistance until we get up into this level right here, perhaps that level like that. And so I think still more upside to come on gold and gold stocks. However, I do sense that if the market stabilizes and the volatility in the market starts to come down, that perhaps could take some of the momentum out of the gold names. Oil, oil trying to stabilize. You can see it hit a new low 2 weeks ago. We've closed green. This is really just an oversold bounce as of right now. It is not a break of the downward trend line. Until we start to build rising bottoms on the daily chart and break some downward trend lines, I wouldn't get too optimistic about oil, but there is at least some signs of encouragement here in the oil chart. So my ratings then, bearish long-term on US stocks, neutral short-term. The same can be said for the Canadian market. Gold, bullish on time frame, on both time frames, and oil, bearish on both time frames. Oil could turn neutral on the short-term time frame if it can break the downward trend line. Stock markets are stabilizing in the short term, and they will likely rally higher in the next week or two. However, they will soon face that resistance at the longer-term downward trend lines where the buyers will have to be really motivated and strong to break the pessimism. And so don't get too optimistic longer term yet. For now, we are just in a short-term bounce, and it will take time and work by the buyers to actually break those longer-term downward trends. Gold is strong and oil is trying to base, but it has work to do. Now, I haven't been trading the last few weeks as I've been on vacation, so I don't have a trade of the week or stocks to consider this week. I will get back to that next week as I will be back home from vacation, back to trading. I'm looking forward to it. Lots of opportunity in the market with all of the volatility. I hope that you all have a great week in the market and trade well.